today. Thank you so much for joining me today on the show today, Ifueko.
Thank you for
Uh,
having me.
all right, and I would like to understand first, looking at this PMA, what are your expectations?
Of course, we expect that it will be rolled over. What matured will be rolled over, and then even more importantly, we anticipate a decline in the rates. If you remember, if you recall, the last OMO auction on Thursday, just about 20% of what was offered was sold, and so what was subscribed for was sold, and that means that there's incredible demand in the market. However, so as a result, we expect that even as by today, by close of business today, we're going to see the results and we're going to see a decline in yields. We already started seeing a decline in the long tenor from the last auction. We saw it go down to 13.2 from 13.3, and now we're anticipating that it will come down to about 13%.
All right, but it's Wednesday now. I'd like to get a sense of how the market has been faring building up to this OMO auction.
Okay, so what we had seen was some bullish sentiment in the market following the OMED demand at the last OMO auction. But yesterday, we started to see that bullish sentiment taper off, and that's because we've started to see some interest in selling for market participants creating short positions to accommodate their purchases for the long tenor. So mostly seeing set activity in the long tenor, but by and large, it's been a quiet market. We're all waiting for the auction results.
All right, but beyond the auction results, so we've seen, I'd like to get the sense on how the currency has been faring.
Last week, we saw a good volume in the market. On the daily average, for the daily average, it was about $229 million. But then again, this week, we've seen a steep decline. On Monday, we had just about $44 million in turnover and $71 million in turnover yesterday. We expect improved turnover between today and tomorrow, following as we anticipate the OMO auction. Hopefully we see that, but then again we've still witnessed paucity of funds in the market, and which has caused slight depreciation. So currently we're at about 362.124 levels in the market.
What about the investors and exporters windows? And I would like to know how the foreign portfolio investors are playing in the market.
Yeah, so essentially when we get those low turnover volumes, it also shows us the play between the FPI investors and of course what the CBN is doing. So this week we've not really seen activity on that end, and inflow from portfolio investors has been seen.
All right, then there's been quite a lot about the IMF talking about the exchange rate in Nigeria and getting unified exchange rate in Nigeria. I'd like to get a sense of what you think about that one.
I mean, the IMF has been on this with us for a while now. We're saying over 3 years they've been asking us to unify our exchange rate. I think the unification of the exchange rate is not so much of a matter as the dollar supply in the market. And this is why typically when we make all of this analysis is because we're looking at what to tell investors. The IMF is of the opinion that the multiple exchange rate is stifling growth and increasing inflation. But when you look at it critically, you're saying that investors are not going to come because you have one rate at 306 and you have another rate at 360. I think what investors are really scared of is, if I bring in my money at 360, am I going to be able to take it out at 360? And what CBN has done to sort of protect customers or investors from exchange rate risk is to introduce the futures contract market, which allows them to hedge that exposure. So it's not the unification. CBN has a defense. They say that the levels at 305 are to protect the poor, essentially to not allow to subsidize the exchange rate to oil importers, to ensure that our fuel prices are moderated. So that's CBN's defense. But I think critically what we should be looking at is the dollar supply, oil prices, and what the future is for us, considering our stance today as a monoproduct economy, and the confidence that the CBN can continually keep in the market.
Okay, very interesting when you put it that way. But then let's look at inflation, though. We've seen these figures rise up for the first time in about 4 months now. What are you making on this, and how do you see it impacting the market?
I see the current inflation rate as a better or a truer state of affairs. It's risen now to 11.24%, and it's the big push is still the food price. It's still food prices. The CBN governor has already has already hinted us that we would see inflation getting up to 12% before we start to see moderation. So it really doesn't come as a surprise.
All right, then there have been more recent, talk about the size of our debt right now. We see the DMO come out with those figures. How you interpreting that?
There are two sides. There are two divides, I would say, concerning the debt rise. And there's a divide that says, and I'm sure this is mostly government officials, that there's a debt to GDP ratio limit of 25%, and we're well within that limit of about 19%. And the defense there is that the federal government's assets can take care of our debt. When we value the federal government's assets, we can take care of our debt. But then again, the other side of it is, do we have the capacity to keep financing this debt? If you look at the 2020 budget that has just been rolled out, you see that debt servicing is about 23.7% of the budget, while CAPEX for the entire country is just below 20%. So you start to look at it, do we have the capacity to fund this? Is this a right place to be? If you look at the debt to GDP ratios, yes, maybe we're not bad enough, but then again, do we have the capacity to keep funding this? And more interestingly, when you look at the 4-year figures, in 2015, we were at 10.5 trillion naira. Yeah. Today, we're at 25 trillion. That's an astronomical growth. And we do not have the revenue, right, or sources of revenue yet to be able to fund this. So that is what we should even worry about, because debt servicing is actual cash leaving the system.
Yeah, because the structure of the budget is still needs work. But let's get back into the market. I'd like to know what's happening with the bonds and the yield activity going on in that space.
Yeah, the bond market currently is very quiet, and for a while I had to ask myself why this, right? The yields currently being offered at the bond market are between 14 to 14.5%, and to be fair to market participants, that's not a very good place to be, considering that the yields being offered at T-bills market is already at 15%. And if there are projections of increased inflation, considering the price sensitivity of bonds due to duration, you're likely to see even that quiet or less demand in that market. So yes, that's what we currently see, cautious plays in that market and minimal demand.
All right, then we'll wait and see how the PMA plays out today. Thank you so much for joining me on